Hello everybody. I'm going to be taking a presentation of evolving sustainable finance. Now this is the same presentation which I used in my first webinar. Please refer to the first webinar on the middle road. But this is a by far more detailed, the same presentation, but I thought I'll, give it, there was so much of, people loved it so much. So I thought I'll just make it as a separate module. So I'm the founder of Middle Road Private Limited. It's a for-profit social venture, which has also got a platform, online platform, the middleroad.org. So let so we have seen how when we are talking about sustainable finance, I'll be talking here. One is like how it is evolving, how it has evolved over the specifically last 2 decades. Now, when we talk about COVID-19 and the pandemic, we need to understand sustainable finance is playing a huge role in bringing out remedies, or bring for raising raising funds in the sustainable sector. Now, recently, European Investment Bank launched a sustainably awareness bond in Swedish krona for 3 billion. We also saw African Development Bank come with a social bond, and World Bank come with a sustainable development bond of $8 billion. Now, when we are talking about these bonds, these are all part of sustainable finance. So today, when we talk about sustainable finance, we will be predominantly talking about sustainable bonds. Although there are a lot of topics, and we'll go forward, we'll have a series, we'll talk about everything which is getting enabled in this space. So what is sustainable finance? What do you mean? So there are a lot of definitions. One of the definitions given is by IMF, which says sustainable finance in incorporation of environmental, social, and governance principles into the business, in economic development and investment strategies. So this is a very broad framework. It's not only limited to economic development, it's also limited to business. We see a lot of work happening in sustainable space, in corporate social responsibility. When we talk about ESG, we talk about investment strategies. So everything in a whole is under the umbrella of sustainable finance. So what is ESG? Whenever I'm talking about ESG here, which is environmental, social, and governance, which is a huge theme of sustainable finance. And when we mean sustainable finance, we also mean ESG. So when we talk about environment, we talk about climate change, we talk about climate mitigation and climate adaptation. We'll come to that later on, what we mean by that. We talk about natural resources. So when we're talking about environment, we're talking everything. We're talking about waste management, we're talking about transportation, we're talking about efficiency management, we're talking about renewables. So just to give an example, one would be green buildings will be a part of something which is happening in the environmental space. When we talk about clean tech, that's part of environmental space. When we talk about social, now when we're talking about social, it's pertinent to civic societies, it's in marginalized communities, underserved markets. It's predominantly work has to be in all these themes, or either of these themes. For example, it could be affordable healthcare and housing. So if you're putting in affordable healthcare and housing either in an emerging economy, or it could be in low economy, or even in advanced economy, but then it has to be for an marginalized community. So these themes would be pertaining to social. And when we talk about governance, we're talking about corporate governance and corporate behavior. It could be regulatory, data protection rights, data privacy rights, accounting standards. So these are various, sort of themes which we talk about. So why sustainable finance? First, when we talk about sustainable finance today, sustainability is actually mainstream. Assets under management in ESG themes were about approximately equal to $31 trillion. So that's a huge amount of money. There's a lot of innovation is coming. This innovation is already happening in commercial finance space, but now we have social finance innovating a lot with the use of blended finance. We'll not go deep into blended finance in this presentation. We're just getting an overview of what the things are happening. So in a nutshell, we know sustainable finance is a mainstream defining both retail and institutional needs. So this is key milestones. These are not the only milestone. There are many more milestones. I've just selected some of them. And we have covered since 1990. Actually, just before 1990, 1981, there was a huge oil spill, and there was a formation of crease, a major moment in terms of environmental principles. It sort of gave a lot of emphasis to environmental principles. So that was one of the major milestones before 1990, which is just in 1989. So since 1990, we see the launch of Domini, which is like a 400 social index. This is the first index of publicly traded companies, which are part of a specific index, which is gave a lot of reference to sustainable development. Then in sustainability, there were launches of Dow Jones in 1999. In 2003, there's the launch of the Equator Principles. Now, this is something which I added from the webinar. The only here it's important is because these are sort of principles on project finance or bridge loans. Now we talk about bridge loans. Bridge loans are really short-term loans, and this applies to loans for less than 2 years. So this gave you a framework of what you should be following. Now, who cares wins? This was a huge moment. It started with UN Global Compact, IFC, and Swiss pension funds. Now, there was a lot of institutions. Now, the whole interest came from institutional investments, and as we see, pension funds are the largest investors from the institutional sector. So this started movement which also resulted in UN principles of responsible investment. So in 2006, this was a key. Six broad principles were laid out, and there were a lot of signatories. Today I think we have more than 2000 signatories of UN principles of responsible investment, and this become a benchmark of in sustainable investing. In 2007, we had a launch of the first green bond. This was done by EIB, which is European Investment Bank. It was followed up in 2008 by the first green bond by World Bank. So, this is the first time you had an asset class, you had a bond which is totally dedicated to environmental finance. You had Paris COP21 agreement coming in 2015. 2015 was also the time of Addis Ababa agreement. So Addis Ababa agreement was one of the and there's also an article about Addis Ababa agreement in the Middle Road .org. When you look at when you read it, it's a very good article because sort of it crowded in private investors into the sustainable sector. I mean, that was the first time a huge thought was given. It also led to the formation of a lot of focus was given to multilateral development banks, and it also led to the formation of a multilateral bank which is known as New Development Bank. But the major part and the major emphasis of Addis Ababa agreement was to focus and to crowd in private investment into the public and development sector. So this is very important. It brought in public-private partnerships. It was sort of laying down, the importance of bringing in public-private partnerships and all this. So 2015 also we know was the 17 UN Sustainable Development Goals. They were laid down. In 2018, why there were a lot of champions, which came in during the time, and we'll see the list of some of the champions. But technical expert group is important because this was a huge moment from the European Union. They needed a standard for climate finance. There was also a lot of emphasis given on benchmarking what sort of practices, what sort of guidelines would be coming in climate finance space. Also, there was an emphasis on sustainable activities, and one of them was in circular economy. So ultimately, when you look at it, sustainable finance becomes an enabler for all the activities within the sustainable sector. So now we look at some of the sustainable types of instruments and strategies. We'll just take a brief overview. We're not going to go in depth. We look at equity capital markets. So that's where a lot of strategies, are coming in through mutual funds and ETFs. ETFs is predominantly have a similar meaning as an index fund, but they are different in differences between an ETF and index fund. That ETFs are listed, you can buy and sell it on the market price, whereas in an index fund you buy the net asset price. They both have low expense ratio, but this is one of the major differences. There are other slight differences, but they sort of in a way replicate index, you could say. So you have fixed income markets. In fixed income markets, what we'll be discussing today will be sustainable bonds. This is the major part of segment which we'll be discussing. Green and sustainable linked loans are something new which has come out in this last decade. You have securitization. So when I'm talking about securitization, I'm talking about green securitization done by Fannie Mae. Fannie Mae is backed by the US government and is the largest player in the securitization space, specifically in green securitization space. So the securitization is not only limited to green, it's also with social and sustainability bonds. Social bonds I'm aware of it. I'm not sure about sustainability bonds, but This is also one of the major fixed income segment within the climate finance. Now the other one which I've given prominence to is offshore bonds. Now I've written about it. I suggest that you look at a podcast by on with Shilpa Pople. So this is where we have discussed, I've discussed in depth about masala bonds. Now, masala bonds are offshore bonds. Basically, it means is you can go to a foreign country and raise capital in the domestic currency. So that's the first time listed in London Stock Exchange. So, for example, Indian government has gone and raised money for the infrastructure projects in London. So a lot of companies are going, including Indian companies. So that's why I suggested that you look at a podcast, you read it. It's a very informative about offshore bonds. Then you have ETFs, mutual funds and indices. You have project based finance. This is again a part of green bonds. When you're talking about green bonds, it goes into backed by projects or project by revenue. Venture funding is something which is evolving. It's usually coming from development space. It's basically plays a huge part in funding startups. Not, I wouldn't say a huge part, but its segment is much bigger than Indian startup sector. So that's why I've sort of put it in terms of sustainable finance. Now, alternative investments is investments. We'll not be talking today about social bonds and development impact bonds, social impact bonds. So, this why I've kept it under alternative investments is because it's a pay. This is also known as pay for success bonds, and we'll look at it. In the subsequent presentation. So when we are talking about why I've kept it under alternative investments is because in a way the outcome has to meet certain barriers. So sometimes people could take it as an equity, sometimes take it under fixed income. I've taken bit as terms of a speculative investment. It is attached to an outcome, and that's why I kept it under alternative investments. Now, these three are the basically asset classes: equity, fixed income, and alternative investments, and that's how I divided, classified the sustainable finance initiative. You also can, read a lot of reports which have different kind of classifications. So when we talk about selected champions, we're talking about United Nations, you're talking World Bank, IMF, Asian Development Bank, African Development, OECD, Greece is what I talked about. Now, Climate Bonds Initiative. This was is one of the biggest non-profit movements which came for climate bonds. ICMA group, which is actually backing all the basically the standards which go into the sustainable bonds. When we're talking about GIN, which is a Global Impact Investment Network, Global Steering Group, Global Sustainable Investment Alliance. These are sort of major champions for impact investors, or the investment strategies. You can say sustainable investment strategies. So these are some of the groups. Sixro is like from University of Oslo, Norway. They are second opinion. So you every time in bonds you need a second opinion how truthful the bond is to that particular category. So Sixro is one of them. So there are a lot of other basically plays. These are some of the ones which I've listed. So sustainable global investing has grown over a period of time. Now it's become $31 trillion in 2018. If you see the top five regions, so this is a 2018 figure. So 2020 or 19 would be sort of much bigger than what this figure says. Now you have sustainable investing regions. You see the top region is Euro, then the US. So the US as a country is the most dominant in this particular sector, and then you have Japan, Canada, and Australia, New Zealand. Now, in the last 2 years, if you look at it, Japan has been the most prominent player. Why Japan leads is because Japan, has the Japan Pension Fund, which is the largest institutional investor, which came into sustainable investing. So I think this spelling needs to be rectified. I've not seen it. So it's in investing. So uh, now when we are talking about Japan, it's in the last 2 years it's given the highest return. Now it's truly a champion. In 2015, I think it was like Government Pension Investment Fund of Japan, which came, which took the PRI principles. It started following UN PRI, and then you had Pension Fund Association next year following it. So Japan has been by far the most dominant, country, I would say, in the last 2 years in sustainable investing. These are some of the strategies in sustainable investing. Now, this is from GSIA report. We see let's look at the allocation. We see still dominated by public equity, fixed income, real estate, VC, which we talked about, impact investing. When you're talking about other, it could be hedge funds, commodities, infrastructure. So these are the themes which, and more themes which come under other category. When we look at the strategies, this is the most important slide. This one of the most important slides. Now, when we uh, when we look at sustainable strategies, it's been there for a very long period of time. It's been more than 100 years since they've been there, but they were predominantly dominated by negative screening. So negative screening was the exclusion of certain sectors. For example, it could be tobacco, it could be gambling, certain sectors on ethical framework. Now that was more of a passive invest strategies. It changed over a period of time. Now if you look at impact and community investment is rising, but still very small, the sector. Sustainability themes are also rising. It's the fastest rising according to this report. Now you have positive best in class, which is a very active type of investment which is rising. Norm based is like if they meet minimum criteria. This could be the rules coming out by United Nations, UNICEF, International Labor Organization. So this is one of the themes which is very popular in Europe. Then corporate advocacy, or corporate engagement and shareholder activity. Now this is very profound in Japan. So these sort of strategies. ESG integration is very popular in America. It's fast rising. ESG integration is taking up ESG principles, incorporating into the financial of your company. This is a very long-term strategy. So what we see is a movement from passive investment strategy over the years in ESG theme to active. So now we are becoming much more active. Now, when we look at sustainable bonds, there are quite a few bonds. So when we talk about sustainable bonds, let's take green and blue. Green is of course the most dominant of all these bonds. Then you have social bond, you have sustainable impact bond, or sustainability or sustainable development bonds, and social impact bonds. So we are not discussing social impact bonds today. So this presentation today we are not coming. This will come in at a later date. They are all anyway not a major part of these sustainable finance and until now. Let's talk about green bonds. So what are the sort of, when we talk about bonds, these are very regular bonds. These are fixed income instruments like bonds or loans. We have, like we saw, there are a lot of loans which are coming in, which green loans, which are following basically the same standards as in terms of their, framework given, and they have to apply for the same framework. So like bonds are emerging as a major capital tool for raising capital. The debt market has always been the largest market in developed economies. For example, US and Europe, the debt market plays a major part in a normally for a businesses in capital markets. Now we are seeing that sort of trend, although it's still not the major part. It's fast rising, and that's where we'll be talking about sustainable bonds here. We see the sustainable bonds are regulated as a financial markets securities like other fixed income securities like bonds or loans. So if you're taking out very simple bonds, they are priced in, they are very regular, like a regular plain vanilla bond, which will go and get it through the sovereign market or the corporate market or the municipal market. So these are the three major segments which bonds trade. They're listed in stock exchanges, for example London Stock Exchange. They focus on environmental, social, and or both themes. So when you're talking about both themes, you're talking about sustainable or sustainable development bonds. They are backed by green, social, and sustainable bond principles. Now this is an addition. They have to have these principles. So when we are talking about principles, we'll come to this at a later date. So let's talk about sustainable bonds issuance. Now in 2019, this data which I have, which is actually posted on ICMA, and I saw ICMA is the major backer of all the standards in the sustainable bonds market. Now this is data given by Bloomberg and JP Morgan. So, and the sort of the amount of sustainable bonds could differ, that because how stringent is the criteria of taking whether a lot of bonds follow the bond principles which we talked about. So in 2019, about $284 billion of bonds were issued. So if you look at growth over 2018, so green bonds grew by 53%. Now this is the largest segment in the sustainable bond market. Now social bonds and sustainable bonds are pretty new, and they don't they their size is still smaller as compared to green bonds, but they're fast rising. We looked at how social bonds are making a difference, even sustainability bonds, how they could be making a difference during the time of the COVID. The SNAT is nothing but supranational. When you're talking about supranational organizations, they are like multilateral, multi-development banks like World Bank, IMF, or it could also be United Nations, agencies which are across continents, the countries, along with SNAT. So SNAT is what we talked about. So what is green finance? When you're talking about green finance, and green bonds is a part of green finance. Green finance or any projects which are related to climate action. So when you're talking about climate mitigation, which means directly reduction of carbon footprints. So this could be something like a renewable energy. If you're, let's say, investing in a windmill or anything in renewable space, this is, so this directly goes to climate mitigation. Climate adoption could be like reforestation. You're actually adopting to the climate changes. Is a good example. Now, when we talked about the theme, we saw that the themes are very broad. So when we look at green finance, we're not only looking at, we're looking at green buildings. We're looking at energy conversation. Now, if your building is by far much more, can cut out wastage of energy. Now that becomes a theme within the green finance space. We're talking about waste management. So we're talking like a lot of circular economy themes. Become a part here right now. Now, they follow green bond principles. Like I said, when I talk about green bond principles, what are they? They're basically four major parts of green bond principles. They basically come in to bring in more accountability or more transparency into the system. It could be how the use of the proceeds are used, whether you've raised a bond, where are you using it? Is it like used only for green finance? It's whether the process, what is your process of project evaluation and selection, how you're evaluating, what sort of criteria you're using it, how are you going to be managing the proceeds of your project, and what's going to be your reporting standard. So these are the four basic principles of green bond principles. Similarly, you have principles in green loan principles, you have climate bond standards. And so just to give you perspective, I talked about climate bonds initiative. Now climate bonds initiative takes 95% of the proceeds should be related to green bond framework. So this is how the strong the criteria is. For example, some of them might take less than that. So just to give you perspective, that's why you would see the issuance of green bonds differ across to different actors. Bonds are really new. They're a sort of a subset of green bonds, and they are basically target marine ecosystem. Green bonds also do that, but you got separate bonds and green bonds. Now sustainable bonds in 2019 and 18, we see the difference, how this difference has increased. So in 2019, this could be a bit different from what we have stated. It again becomes different how the standards are used. Now we see the issuance. Now, when we look at the issuance in 2018, so this is the 2018 figure of total sustainable bonds. We see green bonds are by far the most dominant. You can just see the sort of dominance given by green bonds. But I think this is going to change. To give you a fair idea of how, however, these two segments are going to grow. Now, this is the major part of the sector which would be growing in the next few years. Now, just to give you a share, in 2019 you had 255 billion dollars of issuance. You already have this again from climate bonds initiative. 41.3 is the 2020 data. Now when you look at the largest regions, we have sort of looked at, now this is the largest region when we are looking at green bonds. In green bonds, EU is the largest region, but if you look at the country in 2019, it was US which was leading with 50.6 billion dollars of issuance. We had China at 30.1, and we had France at 29.5. So now use of proceeds. When we look at use of proceeds, these are some of the topics which go in. So clean energy becomes a major part of it. Building is like 29%. So when we're talking about these, so this is not only when we talk about looking at climate finance, you're just talking about renewable space. So this is gives you a whole idea. It goes into water, low carbon transportation, land use. So this is a very good sort of overview to get it what green bonds go in for. So these are some of the top five largest green bond issuers in 2019. Now, if you see Fannie Mae, so I talked about Fannie Mae. Fannie Mae leads in securitization, so it's the number one player in green securitization in the world, and Fannie Mae has been there for a very long period of time. So let's look at what are social bonds. So we looked at green bonds. We just touched upon what are blue bonds. Now, what are social bonds? Look, we talked about what social bonds do. So they basically have to enable, develop, and implement new and existing projects with a new or existing projects also it could be with a positive outcome for a targeted audience population. And when we are talking about targeted population, we are looking at marginalized communities, unserved underserved markets. Now they are in affordable basic infrastructure like clean drinking water, sewers, sanitation, transport, or it could be access to basic services like healthcare, education, vocational training, or it could be affordable housing. So what the basic criteria is to target underserved, marginalized people, people living below the poverty line. It could be undereducated people or people with disabilities, migrants. So these are some of the definition of what would come under the social bond. It's more exhaustive than what we had discussed before. They follow social bond principle guidelines. So like we had green bond guidelines, we have social bond guidelines, and they have to follow. So these are some of the parameters. So to bring in accountability and transparency, like I discussed, effective. Now, social bond issuance. So this is to give you an idea. I've got the data till 2018. We'll update maybe sometime with 2019 also with exactly the issuance in social bond sector. So this is to give you. Now, this is how the social bond has grown over a period of time. Just a different graph, but so this the source is ICMA, Nactis Green, and Sustainable Hub Markets. So sustainable and SGD bonds. So when you take both, basically it's the core mandate is to implement both positive and environmental impact. So it has to be both. So it one cannot be at the cost of the other. So this is how a sustainability bond moves in. The proceeds of the bonds finance or co-finance a combination of green and social projects. They follow green and social bond principles. So you see this rising, and I going forward we'll discuss how things are going to pan out post COVID. And now this just want give you an overview of impact investment, which is to give you an overview of what impact investment is about. Impact investment is nothing but to direct way to address the underserved markets. Basically, using positive social or environmental impact along with the financial return. So when we look at it, they invest in underlisted and unlisted securities like private equity. Their approximate size is about $500 billion. Now they work under insects. So when we look at sustainable finance, including sustainable bonds, impact investment space, there's a lot of greenwashing. There's a lot of people who actually are not, or a lot of institutions are not involved in precisely what their mandate is to serve the underserved markets, or to be in the sustainable segment. And there's a lot of greenwashing, like I talked about in each sector. So that's why you have strong guidelines, and you have OECD, which comes out with very authentic reports of what is happening in either the sustainable finance space. So these are good reads if you want to read about. So what is the way forward in the new normal? Now when we talk about new normal, which has come because of the COVID, uh, basically when I'm talking, I feel like, and this is the view of since I'm the founder of Mill Road Private Limited, and I'm the only employee. So basically it means what my view would be is like the social and sustainable bonds are going to play a very pivotal role going forward. I mean, climate bonds are there. I mean, green bonds will play, marine bonds will play. I mean, marine bonds to get in biodiversity should be one of the more important. I would say like blue bonds would become also a very influential tool, because that is one way at least we can do a climate adaptation. There are a lot of ways we can protect our coastal regions. But social and sustainable bonds, I mean, they also could go into the marine bond ecosystem, would play a very important role. I mean, this is one way where multilateral organizations are, which we talked about, supranational organizations, multi-development banks are, raising capital to address, raising capital to do fund projects which are going to aid, because of the COVID, we are going to have a lot of poverty enhancement scenario going forward. There's going to be a lot more issues going forward with in the development sector because of the COVID. And in order to address that, I mean, sustainable and social bonds are going to play a very, very important role. And we need to also have a very, important taxonomy. So I would, that's why I put TEG when we talked about the group, technical expert group, very important from the EU, because this is going to weed out greenwashing, and there's been a lot of greenwashing happening. As a matter of fact, if you see, a lot of investments are dying, are coming down in Europe. The ESG market, which is index, the growth is coming down, is because they are becoming by far much more strict, and that is what we have to remove. We should not be using sustainable finance as a means to help, organizations. For example, transactional finance is another mode where, maybe companies which deal in fossil fuels are sort of trying to go towards the renewable space, but using it as a as a means to justify to, I mean, this could be a very gray area. From my side, I would, I'm very careful of when I talk about transaction finance. So that's something which I would not like to cover within the sustainable finance space. But organizations are doing that, and a lot of bodies are doing that, and they have their own criteria, because in order, you encourage people to go from one extreme to the other. So, but that's totally the call which you could take. Just to give you some recommended read, GSI Global Standard Investment Review is one you could read, because I've used this as a major part of my discussion. There are a lot of other reads which you could use. Now, you have World Bank and IMF keep on coming out with a lot of news. You have Climate Bonds Initiative which keeps on coming out. There are a lot of, every ICMA, a lot of things. But some of the things which you could refer within me, like when I talked about masala bonds, so I had interviewed Shilpa Pople. That's a very good, not only read, but it's also a very good podcast to know what's happening around the world. You could look at the publications. I've written two publications. One is Sustainable Finance, there is in Impact Investing. They are very good reads. Also, they are not, for example, Impact Investing is a bit limited on India, but the other one is very global. And this is where I've talked a bit about Addis Ababa, the milestone which we talked about before. Now, with this, I come to an end. So this is the first part of sustainable finance. Series. So I'll be coming out with more. I'll be coming out with a webinar where I'll be talking a bit more about sustainable finance. So stay tuned to the middleroad.org. Now, before we end, I hope you enjoyed the session. There was a lot of people, and I hope to see you again in my next series.